It's our favorite time, Wednesday, Mike on the Money, and we always love it when Mike Giordano is here when the Federal Reserve has met. Last time they met, they raised the rate in December 0.5 percentage point. Today, 0.25%. So the question is, we always love your perspective on these things. What does that mean exactly? Because it's a lesser raise, do they feel like they're getting inflation down or that they're meeting their objective? And that's why they're continuing to raise it, but not so much?
Yes, they feel like they're definitely making good progress. Jay Powell said several times today that the disinflation process is underway. That means inflation's coming in. They're not willing to say mission accomplished just yet. But yeah, of course, they were doing 4 consecutive 75 basis point hikes, then went to 50. Now we're at 25. So we are probably close to the end of the rate hiking cycle. The question, though, is how close? Is this the last one? Do we have 1 or 2 more? And then will they eventually start cutting rates?
So you think these mega rate increases are done?
Most likely, unless we see inflation all of a sudden rear its ugly head again and start pushing higher, then they might have to get more aggressive. But I think what Powell's been trying to do is say, hey, we slammed on the brake, and now we're trying to just ease off the brake. We still want to keep our foot on the brake, but we kind of want to look around and see and make sure we don't create too much damage. If the economy starts faltering, then we have more flexibility.
So the markets had a great day yesterday. Then they were down a little bit this morning, and then they popped back up on this news.
Yep.
Markets are still responding favorably to these rate hikes?
Well, they're seeing the rate hikes, the pace slowing down. They haven't yet seen the economy fall apart. We're kind of in the early stages here where you could see the economy fall apart, but it hasn't fallen apart yet. So all those things are kind of positive indicators. So that's giving them a lot of excitement. And then the markets really rallied off of Jay Powell talking, because even though he said we could have more rate increases going forward, that was his actual language. His body language today was totally pushing back on that a little bit, saying he wasn't too concerned if the market keeps rising.
Okay. All right. So now down to our money. You're still hot on the markets? I mean, people still keep investing, and we still trust that this is all going to work?
Absolutely. So, I mean, who knows whether we'll get a soft landing or not?
Yeah, which is what they're going for, right?
Right. I mean, it's hard to say at this point, but you have to always look at investing as a process and not a one-time event. Like, okay, I got a bunch of money, I'm just going to stick it all in the market today. Right, you want to work through all of this stuff, and so we might come into some pain over the next 3 or 6 months, but if you just keep working money in, we are obviously lower than we were a year ago, and if you take a look at corporate America and related to the rest of the world, we're in a better position today than we were a year ago. You know, companies are doing well, capitalism's doing well, we're eventually going to get through these short-term
And inflation is coming down.
And inflation is coming down.
But my money costs me more. That credit card and that car loan.
Yes, and that's what Powell said. Inflation it's coming down because the interest rate hikes have had their intended effect.
Okay, all right. Mike Giordano, thank you.
I know you love this stuff.
I do. I love this stuff because you make it all make sense for us, and that's why we love that stuff.
Well, thank you.
Thank you so much for being with us. We'll be right back.